Who is Warren Buffett? Widely regarded as one of the most successful investors in history. He is the chairman and CEO of Berkshire Hathaway, a multinational conglomerate holding company, and is consistently ranked as one of the richest people in the world. But who is Warren Buffett, and what led him to build his fortune? Warren Edward Buffett was born in Omaha, Nebraska on August 30th, 1930. He was the second of three children, and his father, Howard Buffett, was a stockbroker and member of Congress. Buffett showed an early interest in business and investing, selling chewing gum and Coca-Cola door-to-door as a child. After graduating from high school, Buffett attended the University of Nebraska. He was a brilliant student, but he was eager to learn more about investing. He applied to Harvard Business School, but was rejected, so he enrolled at Columbia Business School instead. At Columbia, he studied under Benjamin Graham, a value investor and author of The Intelligent Investor, which had a profound impact on Buffett's investment philosophy. After completing his degree, Buffett returned to Omaha and started working for his father's brokerage firm. In 1956, he founded his own investment partnership, Buffett Partnership Limited, which he ran for 13 years. During this time, he made a number of successful investments, including the purchase of a significant stake in a textile manufacturing company called Berkshire Hathaway. By the early 1970s, Buffett had transformed Berkshire Hathaway into a holding company, with investments in a wide range of businesses, including insurance, furniture, and candy. He used his skills as a value investor to identify undervalued companies and buy them at a discount. In 1985, Buffett took control of Berkshire Hathaway and used it as a vehicle to acquire a number of other companies, including Geico, Dairy Queen, and Fruit of the Loom. He also began investing heavily in the stock market, and by the late 1990s, he had become one of the richest people in the world. Despite his immense wealth, Buffett has remained grounded and committed to his values. He is famously frugal, living in the same house he bought in Omaha in 1958, and driving an old car. He has also pledged to give away the majority of his wealth to charity, and he has been a vocal advocate for progressive taxation and other measures to reduce income inequality. What are the key investment principles that guide it? Invest in what you know. The most important one is invest in what you know. It's one of the most famous investment rules of Warren Buffett. This rule has been the key of his investment strategy and has been able to build a vast fortune by adhering to this principle. Buffett believes that the best way to invest is to focus on businesses that you can easily understand. This means that he looks for companies that have straightforward business models and that are easy to analyze. He avoids investing in businesses that are too complicated or that he doesn't fully understand. For example, Warren Buffett doesn't invest in technology companies. The reason for this is simple. Investing in businesses that you don't fully understand can be risky. If you don't understand a business, it's difficult to assess the potential risks and rewards of an investment. This can lead to making poor decisions and ultimately losing money. In contrast, by investing in businesses that you understand, you can better assess the potential risks and rewards. This means that you can make more informed investment decisions and minimize the chances of making a costly mistake. Long-term investing. The next one is long-term investing. Warren Buffett's investment philosophy centers around the principle of long-term investing. He is a firm believer in finding high-quality companies with a strong track record of success and holding on to them for many years, if not decades. By doing so, he is able to take advantage of the power of compounding, which allows his investments to grow and compound over time. One of the main reasons that Buffett prefers long-term investing is that it allows him to avoid short-term volatility. He believes that trying to time the market or make short-term trades is a risky strategy that is unlikely to generate consistent returns. Instead, he advises investors to focus on the future potential of their investments and be patient with them. Another advantage of long-term investing is that it allows investors to take advantage of market downturns. When the market experiences a downturn, many investors panic and sell their stocks. However, Buffett sees this as an opportunity to buy high-quality stocks at a discount. By holding onto these stocks for the long term, he's able to take advantage of the eventual market rebound and generate higher returns. Value investing. It is also very important to invest in real value. Value investing is one of the key principles that has guided Warren Buffett's investment approach throughout his career. It's about finding companies that are undervalued by the market, but that have strong underlying fundamentals that suggest they will eventually be recognized as being worth more than their current market price. He looks for companies with a durable and sustainable competitive advantage, such as strong brand recognition, low-cost production, or high barriers to entry. These factors make it difficult for competitors to replicate their success and give the company a long-term advantage over its rivals. In addition to looking for companies with a strong competitive advantage, Buffett also focuses on companies with a history of strong financial performance. He looks for companies with a solid track record of earnings growth, consistent profitability, and a strong balance sheet. By investing in companies with these characteristics, he is able to minimize risk and maximize the potential. Patience. What is the favorite holding period of Warren Buffett investments? Forever. Patience is a key principle that has played a critical role in Warren Buffett's investment success. Throughout his career, he has demonstrated a willingness to wait for the right opportunities to present themselves and has avoided making impulsive decisions. This patient approach has allowed him to take advantage of market inefficiencies and find undervalued stocks that others may have overlooked. Buffett's approach to patience is grounded in the idea of value investing. He looks for companies that are undervalued by the market and have strong underlying fundamentals. By taking a patient approach and holding on to these stocks for the long term, he is able to benefit from their eventual recognition by the market and generate significant returns. In addition to his patient approach to investing, Buffett is also known for his discipline and consistency. He has developed a set of investment principles and sticks to them consistently, even in the face of short-term market fluctuations. By sticking to his principles and maintaining a patient approach to investing, he has been able to generate huge returns. Do your own research? Buffett believes that in-depth research is critical to making informed investment decisions, and he personally spends a significant amount of time researching companies before investing in them. Buffett's research process is both thorough and systematic. He typically begins by reading a company's annual reports and financial statements to gain a deep understanding of the company's business model, competitive advantages, and financial performance. He also looks for companies with a strong management team and a clear strategy for long-term growth. In addition to reading company reports, Buffett also relies on a network of trusted advisors and analysts to help him evaluate potential investments. He often seeks out experts and professionals who can provide insights into specific industries or markets. Diversify your portfolio. Diversification. He believes that it's important to spread investments across different assets and industries in order to minimize risk and ensure that you're not overly exposed to any one stock or sector. One of the primary reasons Buffett advocates for diversification is to reduce the impact of market fluctuations on a portfolio. By holding a mix of different investments, such as stocks, bonds, and cash, an investor can help to mitigate the impact of any one asset class that may be experiencing volatility. A well-diversified portfolio also helps with an emotional approach to investment. If we keep all our capital on one asset, even the slightest price hesitation causes us to lose our mental sobriety and increases the chance of making rash decisions. Buy the rumor, sell the news. Warren Buffett does not follow the crowd or invest based on popular sentiment. Buy the rumor, sell the news strategy involves being skeptical of market hype and not jumping on the bandwagon of the latest investment trend. When there is a lot of buzz around a particular company or industry, it's often a sign that the market has already priced in the potential gains, leaving little room for further upside. In this case, Buffett advises selling shares rather than buying. Buffett's contrarian approach is based on the idea that the market can be inefficient and prone to emotional reactions. By taking a rational and analytical approach to investing, he believes that he can capitalize on market inefficiencies and generate long-term returns. However, it's important to note that Buffett's contrarian approach does not mean blindly going against the market. Instead, he emphasizes the importance of conducting thorough research and analysis to identify opportunities that are overlooked or undervalued. Conclusion. Warren Buffett's life and career are a true inspiration to anyone looking to achieve success through a combination of hard work, discipline, and a strong sense of values. His unwavering commitment to these principles has enabled him to build a vast fortune and become one of the most successful investors in history. However, his success is not just measured by his financial accomplishments. It is also rooted in his unwavering dedication to making a positive impact on the world through his philanthropy and advocacy. Buffett's investment acumen is grounded in his philosophy of value investing, which emphasizes the importance of investing in companies with strong fundamentals, a sound track record, and a long-term growth potential. He has an uncanny ability to identify undervalued companies and acquire them at a discount, allowing him to reap significant returns over the long term. His approach to investing is based on rigorous research, analysis, and a deep understanding of the industries and companies in which he invests. That's it for today. If you liked this video, be sure to leave a comment. Do you find Warren Buffett's story inspiring? To stay up to date with future videos, don't forget to subscribe to our channel as well.